Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Brent Cook of Exploration and Insights. Thanks for being here, Brent.
Glad to be here.
I want to talk with you a little bit about takeovers in the industry and why some of these companies that have been waiting and expecting to be taken over haven't been taken over yet.
That's a good question. There's a lot of reasons, I think, but I think probably the main thing that people should take away from this is that when a company puts out a resource report, resource estimate, or preliminary economic assessment, that's a third-party document. And I'm seeing a lot of slop in those, a lot. I mean, if there was a scam that's going on for this cycle, it's that these things are not being done to the due diligence they should. So anyway, getting back to your question, when a major mining company looks at a project, they do all their in-house resource calculations and their economic analysis of the data themselves. And I think what this is telling you, despite these companies that have fantastic, net present values and IRRs and cash costs, in reality, when the majors look at it, they don't see it that way. That's why I don't think we're seeing as many as people expect.
And what do you think the majors are looking for right now in terms of these junior mining companies or the companies with resources? What are the
margin with growth potential? And that's what it's really all about. We talked about grade at the panel, which was really interesting. And it's not about grade per se, it's about margin per ounce or margin per pound of copper produced as opposed to grade. And I give the example, there's a vein in Nevada that runs 30 grams per ton that barely breaks even, yet I know of a project in Armenia that runs 0.9 grams is going to be producing gold at 500 an ounce. It's all about what it really costs to blow up the rock, grind it up, process it, extract the metal, and ship it off and build the whole infrastructure. That's what you got to look at, not grade per se, but margin on that production.
And are there deposits like that are out there right now held by juniors or mid-tier companies that have good margin?
Yeah, there are some. I own a few in the portfolio. We can't talk.
No, feel free. Mention a few.
I would say Lydian has a deposit that is going to be a very high margin in Armenia. I would say Belo Sun has a deposit in Brazil that is going to be very high margin. Those are two that come to mind. And the characteristics are right. I've gone through the data. I like the looks of it. It's a process, but I think that's what a major is going to be looking at.
And what would be your take, are we going to be speeding up or slowing down in terms of takeovers going forward over the next couple of years?
I would guess, and this is just a guess about what we've been seeing. They'll be happening, but it takes a long time. And most of these larger companies are now run by accountants and lawyers and that, so it's slowed down quite a bit. It's the mid-tier ones that are going to be most active. The Yamanas and that size company, New Gold. Those are the ones to watch because they're the growing companies.
Excellent. Thanks very much, Brent, for talking takeovers with us.
You bet.
And that's Brent Cook of Exploration Insights. My name's Scott Gibson with Beneath the Surface. Thanks for being with us.